Assalamualaikum warahmatullahi wabarakatuh. Introduce, my name is Diki Andriam with NPM 23412061. I am from accounting class 23A. Here I will present about the basics of tax. Basic principles of taxation. Understanding. Tax is a mandatory contribution from individuals or business entities collected under the law, without direct compensation, to finance state expenditures such as development and public services. Tax is one of the important components in a country's economy that acts as the main source of income for the government. Taxes are collected by the state from its people with the aim of financing various public expenditures and carrying out government and development functions. Tax functions. There are 4 general functions of tax, namely: 1. Budget function, budget as a source of funds for the government, to finance its expenditures. 2. Regulating function, regularand, as a tool for regulating or implementing government in the socio-economic field. 3. Stability, taxes as state revenue can be used to implement government policies. 4. Income redistribution, state revenue from taxes is used to finance general expenditures and national development so that it can open up job opportunities with the aim of increasing people's income. Benefits of taxes. Taxes are the main source of state revenue. Without taxes, most state activities would be difficult to implement. The use of money includes taxes ranging from employee spending to financing various development projects. The construction of public facilities such as roads, bridges, schools, hospitals/health centers, police stations is financed using money from taxes. Money and taxes are also used for financing in order to provide a sense of security for all levels of society. Every citizen from birth to death enjoys facilities or services from the government, all of which are financed with money from taxes. Taxes are used to subsidize goods that are greatly needed by the community and also to pay the country's debts abroad. Taxes are also used to help MSMEs both in terms of training and capital. Types of taxes collected by the government. The taxes that must be paid consist of several types, which are classified according to the agency or location of the collector, the object and subject of the tax. 1. Taxes based on location or collecting agency. If distinguished according to the collecting agency, taxes are divided into 2 types, namely state taxes and regional taxes. State tax. Tax, income tax, PPH, land and building tax, stamp duty, customs, import duty, and others. Regional tax. Regional tax or local tax is a tax collected directly by the regional government. This tax is only for people from the region itself, where the collection is also carried out by the level 1 and 2 regional governments. Examples of regional taxes are hotel tax, entertainment or entertainment tax, restaurant tax, motor vehicle tax, street lighting tax, and so on. 2. Taxes based on tax objects and subjects. Similar to the previous one, taxes based on tax subjects and objects are also divided into 2 types, namely: subjective tax. Subjective tax is a tax that is imposed based on the conditions of the taxpayer or WP. Its nature is individual, so the amount of tax that needs to be paid depends on the ability of the taxpayer. Every individual who is an Indonesian citizen has an obligation to pay this tax. Meanwhile, foreign nationals will also be taxed if they have an economic relationship with the Republic of Indonesia. Examples of this tax are wealth tax and income tax.
Subjective tax is a tax that is imposed based on the conditions of the taxpayer, or WP. Its nature is individual, so the amount of tax that needs to be paid depends on the ability of the taxpayer. Every individual who is an Indonesian citizen has an obligation to pay this tax. Meanwhile, foreign nationals will also be taxed if they have an economic relationship with the Republic of Indonesia. Examples of this tax are wealth tax and income tax. Objective tax is a tax that prioritizes the condition of the object in its imposition. So, this tax does not consider the condition of the taxpayer at all. The objective tax group includes Indonesian citizens who use or own taxable equipment, Indonesian citizens who transfer their assets to foreign countries, taxes imposed on the use or ownership of luxury goods. Meanwhile, examples of this type of tax are import duty, import tax, luxury goods sales tax, value-added tax, stamp duty, and so on. Point 3. Tax based on nature. The last is the type of tax based on nature, namely direct tax and indirect tax. Direct tax, or what is called direct tax, is a type of tax that is fully borne by the taxpayer, so it cannot be transferred to someone else. The reason is, the obligation or right to tax is already attached to the taxpayer. Payment of this tax can be made periodically according to the tax assessment letter obtained from the tax office. An example of this type of tax is land and building tax, income tax, and motor vehicle tax, indirect tax. Indirect tax or indirect tax is a type of tax imposed on taxpayers if they do certain things. That way, the tax cannot be collected periodically, and can only be collected when an event occurs that requires paying tax. An example of this tax is VAT or value-added tax, which will only be collected when eating at a restaurant or shopping at a mall. In addition, there is also a luxury goods sales tax, which will only be charged when taxpayers want to sell their goods. Tax collection system. The tax collection system can be divided into 3 systems, and Mardiasmo, 2011:7, namely as follows. 1. Official assessment system is a collection system that authorizes the government, tax authorities, to determine the amount of tax owed by taxpayers. Point 2. Self-assessment system.